Welcome back. Oil prices have been falling. Take a look at crude below $80 a barrel, the lowest price this morning since December. Crude oil's at $74.31. That is up just a fraction. Brent is at $79.66. Joining us right now is Tortoise Sr Portfolio Manager and Managing Director Rob Thummel. Rob, great to see you. Thanks very much for being here. Give us the supply-demand situation in the oil markets right now. How do you see prices?
Well, I think prices are low right now. The situation right now is simply, it's probably a bit oversupplied from the oil market perspective, and that's because of the situation in China. In other words, the COVID lockdowns. And so as China comes out of lockdown, you're going to see an increase in demand. So long story short, that we've got low inventories, and next year there's going to be multiple sources of really negative. We're going to go lower, basically, as far as the inventories are concerned. So that means prices are going higher. Russia supply is coming down, China demand's going up, U.S. supplies probably going to have to go up as well. And so as a result of that, we think that oil prices will probably go into the 90s at some point in time next year, which is a nice spot to be for both the consumer as well as the producer in the U.S.
Well, I'm glad you mentioned inventories because, Dane, aren't we at the lowest levels in the strategic reserve since 1984? I mean, I'm wondering how worrisome that is.
It's worrisome if there's any kind of major supply disruption. And what about the cost of refilling it? That's one of the huge concerns. If, the cost to the United States to refill it, which has to happen.
Now they got to buy it at $70 a barrel.
Well, or higher if we're right and oil prices go higher and you start refilling it. The thing is that basically globally, you have to overproduce globally by about 800,000 barrels a day just to get oil inventories back to historical norms where they have been. So the market can be oversupplied for a while. It's all about China, though, right now and when the demand's going to come back from China.
James?
Yeah, I'm wondering about U.S. demand. Excuse me. A lot of people in this town are convinced we're heading into a recession. Atlanta Fed, pretty optimistic forecast for the current quarter. And as we've been talking about, still a strong jobs market.
Yeah.
Is it possible you get a U.S. economy that's stronger than people expect and maybe prices go up a little more?
Yeah, I think it's a great observation, James. What we've seen so far, actually, in oil demand, even in this economic slowdown, whatever we're in right now, oil demand in the U.S. has been very, very strong. And so as a result of that, I would continue to expect oil demand to be very, very strong into next year and continue to see U.S. oil or demand for oil, gasoline, diesel, jet fuel really continue to increase.
So does that change if we have a recession? Because yesterday the story was the bank CEOs at this investor conference talking about a slowdown. All but two firms in the bank index of financial heavyweights fell because Brian Moynihan, Jamie Dimon, David Solomon, Goldman Sachs, all said things are worsening quite a bit. I mean, do you think that your expectation for prices changes if a recession happens?
So big picture, I look at it this way, Maria. So I look back over the last 40 years. There's only been two times in 40 years when the global energy demand has gone down. It was in the financial crisis and obviously it was during COVID. Obviously, in the last 40 years, we've had other recessions in the U.S. and globally, and they've been much more mild. So if we have a mild recession, like a lot of people are talking about, you will still see energy demand. That's just really testament to how important energy is to really an economy, both globally as well as domestically.
And do we keep, where do you see the demand for oil long term in terms of how much do you think solar and wind are really going to replace it?
Yeah, so we need an all-above approach. We need to decarbonize. I think everybody agrees on that. But if you just look historically, oil and natural gas globally have been about 57% of the global energy supply. It was a decade ago. It's about 55 today. If you fast forward another decade, we're going to be at probably about the same amount, 55% for oil and natural gas globally. Obviously, solar or renewables potentially displaces coal to a certain extent, but we'll see still pretty substantial demand for natural gas as well as oil going forward.
The administration is trying to get that supply, obviously, of fossil fuels to go down, and Oversight Committee ranking member James Comer is launching a probe into the administration's energy policy. He says they've got secret deals with Saudi Arabia. Here he is on Sunday with me on Sunday Morning Futures. Watch.
One of the biggest crises of the Biden administration is their energy policy. And what we've requested is, what is their energy policy? What direction are they going in? Or what did they base selling the strategic reserves on? What exactly did they ask Saudi Arabia when they asked Saudi Arabia to increase oil production before the election? The Democrats would call that a quid pro quo in the previous administration. So
Rob, what do you think happens here in terms of the investigation into energy policy?
Well, I think it's very clear that the U.S. is going to need more oil and gas production. The world needs more oil and gas production from the U.S. because the world needs a secure supply source of energy, and that's what the U.S. can provide. So ultimately, where all this goes, I think, is you need more secure supply sources, which means more U.S. oil and gas production.
Yeah, but they're not allowing this to happen because they don't give the permits, Rob.
That's right. A quick question. I remember, 25, 30 years ago, they said there's really going to be no more oil in 25, 30 years, which would be today.
Yeah.
We got plenty, right? How much more oil do we have going forward?
So one of the greatest energy technologies changed all of that, and that was the discovery of shale oil. That was true 25 years ago. Remember, shale oil was discovered right around 2006, 2007. And so from there, with shale oil production, obviously the U.S. has changed the game. They went from a net obviously importer of commodities, oil and gas, to now a big net exporter of oil and gas for a long, long time. There's plenty of supply of oil and gas. The issue is just simply construction of enough pipelines to make sure that oil and gas can be transported.
Well, and permitting it, like here in New York, there's a natural gas moratorium.
That's right.
They're phasing it out in
That's
10
right.
years, which
That's
is
right.
crazy.
And what the administration likes to say is, oh, there's 9,000 leases out there and the oil companies are not using it. No, no, no. After you have a lease, you have to get the permit.
Yep.
And they are not issuing the permits. And that is where the bureaucracy comes in to stop production in this country. Rob, it's great to have your thoughts on all of this. Thanks very much.